Good afternoon, everyone. It's Pablo Zuanic, cannabis analyst at Zuanic and Associates. Welcome to everyone listening via the web, via Zoom, via Spaces. We are out there in quite a few forums. I have the pleasure to introduce to you the C-suite of Village Farms. We have President and CEO Michael DeGiglio. We have EVP and Chief Financial Officer Steve Ruffini, and we have Chief Operating Officer Gillin Lefever. Welcome to all of you.
Thanks, Pablo.
Thanks.
Thank you, Pablo.
So look, as usual, we have a lot to cover, but we want to start, Mike, just with some introductory remarks, frame for everybody here, Village Farms, your progress so far, and strategy, just big picture. Let's start with that. Thanks.
Okay, well, first, Pablo, thank you. We really appreciate being here. And let me just tell you up front that I really respect taking the time to highlight both Organogram this week and Village Farms. You know, we're two strong cannabis companies with our roots in the first federally legalized recreational market in the world, which is Canada. And I'm also pleased with my colleague, Steve Ruffini, our Chief Financial Officer, and Gillin Lefever, our Chief Operating Officer, as you mentioned. We think we're a great team together with the depth we have in our company. So starting with Village Farms, 40,000 feet, we were pioneers and innovators in cultivation over the last 35 years in the United States, Canada, and Mexico, with incredible experience, both operating, designing, and building large-scale controlled environmental assets for production from cut flowers and other high-value crops like produce. So today we have two synergistic businesses, Cannabis, and basically for the global market, we started in Canada, as you know, and Fresh Produce, which is really focused on the North American market. Both are about equal in revenues each year at this point. Strategy for us is to build a global cannabis platform. Currently, we're ranked number 2 LP in Canada, which we built almost all organically. Which has high returns from the business model we incorporated. We've never wavered from that business model from day one, and I think it's proven out. And I'm very confident to say it was the right business model for Canada, and I think it could be leveraged up in other markets going forward, no doubt. A lot of that expertise came from the 3.5 decades in cut flowers and produce at scale. We've often said that we may not be the smartest folks, but we made a lot of mistakes in our life, and we were able to do that in cannabis in Canada without those mistakes, and I think it shows clearly in our financials and our brands. So today we are leading brands and leaders in innovation. I think goes without saying when you look at both our market share on flower, for example. We've been number 1 in Canada in flower, which is still the largest segment of the market, for over 2 years. So we're very proud of that. And we're extending the strategy now internationally as well in markets that will both have in-country production where required for the recreational markets that are emerging internationally, as well as operating a light asset model out of Canada for medicinal markets, both in the EU and other global territories. So with that, I'll turn it over to you to start the process. Thanks, Bob.
Thank you, Mike, for the introduction. So look, we have a lot to cover, but I want to start with the topic of your cost leadership, right? What we've seen in the Canadian market, obviously, is price deflation, a number of companies not being able to be profitable. In that context, you're one of a few companies that has remained profitable, right? So again, big picture, explain to us where does that cost leadership come from, and any metrics you can share in terms of the scale of your production. And again, if you can provide metrics so people can understand the advantage that you have in cost and why that is sustainable.
Well, I love the question overall from a 40,000-foot perspective. I'm not going to drill down specifically to, what is in the soup, so to speak, that makes us successful. I will say this, though. When we came in, we were not a first mover in Canada. We sat back, and this is probably an important part to the question, is when we had looked at medicinal cannabis back in 2014, actually, in Canada, and we felt that the market will flip to rec at some point, and decided not to pursue it and wait for rec. And that gave us a lot of time to see who was in the space. A lot of the players started in medicinal and then flipped to recreational, as you know. And that gave us a lot of intel that we could apply to. And of course, at the first time we had an opportunity, once we got into the recreational market, to present, we presented in our first presentation that the market would have price compression, start to commoditize, at least at the cultivation level. And also that we were going to apply mostly greenhouse growing to make our way. And both of those were pretty shot down. And I think the model today has proved that. And that's a really important point to make. As far as why, we knew that if our business model had to be based on price compression and commoditization, and let's not confuse being the low-cost producer and brands. It's always prudent in any agricultural crop. You have to always look at it that you need to be the low-cost producer, regardless of how successful a brand may be at the end of the game. And that's what we applied to. So everything we did was based on prices coming down, and they did, and producing the very highest quality at the very lowest cost. That business model, as I said, is the business model we have today, and it's proved out right. The other thing we did is remain very focused. We were focused not only on cost reduction and quality and innovation, but also on being number one in flower before we advanced to other products within the cannabis space, and also remain very focused on being number one in Canada. That's still our goal before we entered the international market. So I think that sort of discipline, coupled with some great people, led to where we are today. And I'm very proud to say, I mean, we've been EBITDA positive since the first quarter back in 2018 that we ever sold B2B, because we didn't start selling retail to a year later. And we've been EBITDA positive every quarter since. If you look at our adjusted EBITDA to cash flow, it's very close. So it's real numbers. And we're positive, we have positive cash flow. And I don't really know of any other company, any other public company in Canada that has reached that goal at all, coupled with the market share we have. And if you look at the numbers, even over the last 5 months, it continues to drive our market share in the right direction.
That's good. So maybe for Steve, remind us of the scale of your facility in British Columbia. How many of the 3 Delta units you've been able to convert from produce to cannabis, and what are the plans to expand capacity there?
Yeah, so currently we're producing on 2 of our facilities, half of one and full on the other, so 1.5 million square feet of production. Half of that facility is currently in tomatoes, and we're actively looking at this stage at our 2025 demand plan, understanding whether it's time to convert the remaining half, and then we will be up to a little over 2 million square feet if we do convert that sometime in 2025.
And can you talk in terms of tonnage? I mean, how much production you are yielding right now?
Don't give those type of numbers, just because then it's pretty easy for someone like you to figure out our cost. And as Mike said, our income statement and cash flow speak for themselves with respect to our cost of production. And again, there's no standard. I see other people quote numbers, and do they include trim? Not including trim. We don't include trim in our own calculations. Obviously, we're not in business to grow trim. Do we use the trim? Yes. Do we sell the trim? Yes. But we're not in business to grow trim. We're in business to grow, high grade flower, which is what we use for our own denominator to come up with our own internal cost of production.
Right. So look, I want to stay on the topic of cost leadership, because I think that's a very important one that maybe sometimes gets lost here. So Mike, I mean, from a strategic point of view, when you started, initially you were B2B, and then you began to introduce the brands, right? And over time, it's more weighted to brands and B2B. Overseas, maybe it's the same story, right? You started B2B, mostly white labeling, not a lot of feet on the ground, and we'll come to more detail on international later. And maybe later on you will expand. I mean, is that just the overall attitude or approach of Village Farms, just to start, slow and then expand once you prove yourself? Just talk about that from a big picture point of view, if you can.
Yeah, You're absolutely right. And I think we've had this conversation. Everything we try to do is a measured approach. For one is we don't want to enter a market just for starters. If you look at the scorched earth in the EU over the last 5 years, how many companies have gone internationally, built projects that will never be profitable, lost tens or hundreds of millions of dollars? What we always looked at the landscape and said, let's take a very measured approach. Let's understand the rules and regulations before we go further. Let's be patient and be very deliberate and direct. And that really has come back to this course, our cost leadership going forward. The example there would be, first of all, the first year we sold B2B in Canada, it was because Health Canada's rules where you had to have your wholesale license for 1 year, waiting for a retail license, or it basically took a year to go from B2B to wholesale. But as I mentioned earlier, even at B2B that first year in 2018, we were EBITDA positive. Secondly, once we were able to go retail, and today we're number 2 market share retail, we created the Pure Sunfarms brand. And as you know, because we've had these conversations in the past, we had one brand. And we wanted to make that brand excellent before we ventured out. Today, we have a number of very successful brands, both out of Pure Sunfarms and Rose, 2 companies in cannabis in Canada. And that's been a very measured rollout on branding as well. Secondly, if you look at even how we approach diversification of our products, we wanted to be number 1 in flower. Before we concentrated on pre-roll. I think in pre-roll in the last 18 months, we've gone from basically 0 to now we're number 2 in pre-roll in Canada. And now that we've achieved that and our goal is number 1, we're looking at the white space and other products. And of course, vapes is next. And then we're going to apply a very measured approach there, again, to be number 1 in vapes. That's our goal. Once we saw that horizon happening, and we only did 1 acquisition in Canada, and that was Rose out of Quebec. That was the very accretive acquisition. Everything else we've done has been organic. We didn't buy any other companies to get there or any other production facilities. So once we felt that now we had our sights set on being number 1 and we just have to keep executing in Canada, that's when we decided to go international and start our exports. And we did start exporting B2B, but keep in mind, Pablo, I mean, we're selling some of our brands now. In the UK, we've been selling Pure Sunfarms brand with repeat orders. So we're doing both. And again, we're doing it in a measured way.
Understood. And maybe a question here for you in terms of there's this notion out there that indoor grown cannabis, it's always better quality than that grown in greenhouses. Can you give your perspective on that? Because obviously here, Village Farms, it's able to produce top quality from greenhouses, right? You don't have indoor facilities in British Columbia in your case.
The best quality, not top quality, the best quality. Yes, that's how we've basically number 2. And in Quebec, we're number 1, and I see ourselves being number 1. But I love this question because I've gotten this question many times over the years. We were the first greenhouse grower in Canada at scale. And my original answer was the ones who answer that question that you can only have good quality out of an indoor facility are the ones who have spent hundreds of millions of dollars building indoor facilities. So they have to say that. At the end of the day, that is not true. If you look at what's number 1, you have to look, are you profitable? In Canada, are you paying your excise tax? Are you profitable? Are you cash flow positive? And when you combine all those metrics, including our quality and market share, which is determined by the consumer, we're basically number 1 we're number 1 on the financial metrics, but number 2 in market share. And keep in mind many of the companies that or any companies that have hit number 1 at some point in the last 5 years, it's usually been based on acquisitions to get there. So the answer of is greenhouse growing, Mother Nature involved in the process, better? Let's just say it's equal, because I don't want to go too far, but overall, we love it. And we like indoor grow. We have an indoor grow. We understand indoor grow. Our Quebec facility, 55,000 square foot indoor grow. In the Netherlands, we're one of the only North American company that's building in the Netherlands, and we'll get to that, 1 of 10 license holders, we're building an indoor facility. So indoor works. It certainly works in if you're doing it inside of a city and you're concerned with odor releases and other things. But from a pure quality perspective, that's just a joke that you can't get the quality. It's about the grower,
Right.
not the facility.
And on that point, I mean, indoor cannot compete cost-wise with greenhouse.
No. And if you look at the US model, which is really an experiment, right? There's so much different technology in the US. Of course, there's no interstate commerce. So if you're a limited license state, as you know, you can, and your competition's 1 or 2 or 3 other producers, you know, you can really drive margins high. But that model will change one day, and growing at scale, low cost, just like in Canada and just like everywhere in the world, will be the model that survives and the durable model in this industry.
Okay.
And that's what we are.
Understood. So look, I mean, again, we have a lot to cover. We'll concentrate on Canadian rec and your progress there. But Anne, maybe one question for you, for the audience here, remind them of your transaction in Quebec, the Rose LifeSciences, the business model of that company, and why did that transaction make sense? It seems that you sell own brands there, also distribute, but just some comments on that piece of the business, which I think should get probably more attention because it's a big success and the successful transaction.
Thank you for highlighting that for us. So it's been a great success. I would argue, you know, one of the few accretive acquisitions in Canada. It is indoor grow, 55K square feet, as Mike alluded to. 4 primary brands. They're really well positioned in price points similar to what we've done in Pure Sunfarms. They have a commercialization expertise because they both built their business, and they do represent some others for distribution to the Quebec only province. And, you know, it's just been very complementary to the expertise that we have on the west side of Canada as well. So just a great team and some great shared knowledge. Just last point I would make is we currently own 80% of that company, and the founders are still very much with us. They're the other shareholders alongside us, and that too is just a great story that they have stayed with.
Right. Understood. And maybe I'll stay with you here, but moving on to the Canadian rec business, right? Like Mike said, #1 in flower, #2 overall. The latest Hifyre data shows significant gains for Village Farms, not only in flower, but also in other categories and in various provinces. I know Hifyre is not perfect, but what can you comment or frame here? I know you cannot make forward comments on 2Q earnings, but you know, there seems to be a very strong performance on the market share front. Let's start with flower first and maybe give more color. Is it new brands? Is it new distribution points, expanding in some provinces? Just color there.
Yeah, so here's the good news. It's not one particular item. I mean, if you think about it, we've got kind of 8 core brands. If you talk at the 4 that I mentioned for Rose, Pure Sunfarms also has 4. We're in over 95% of the Canadian market already. So this really has been a game of responding to what the consumer wants. So each province tells a different story as to which brand we are using and leading with, and what kind of form factors we're putting out under each brand. You know, just to give you a quick example as 2 different ones, our Super Toast brand doesn't get much play publicly, but it is the 3rd fastest growing flower brand year to date in Canada, and it's only sold in 4 provinces. So that's an example of just a way we positioned against what we saw as a real consumer need, that brand, when we launched it. It's now 20% of all milled sales. So it's risen to #2 in milled sales, despite only being in those 4 provinces. And then you could compare it to something like Fraser Valley, where, you know, we've positioned that as more of a value brand. And there are provinces like BC where it is the #1 brand for us, both because of the consumer being more value oriented, but also they love the idea of this homegrown brand, Fraser Valley, right in being grown right in their backyard. And so we really drive our brand strategy, Pablo, from where's the consumer. And the team does a great job on this across the board. I should mention that there's a really neat product that Rose developed. I don't think it gets enough play either. It's called Homage, and it's a premium craft play. And so, we are sitting in every price point across this portfolio and delivering growth and striving, already hitting top 1 or 2 or 3 positioning as we've strategized.
Right.
And just one more thing, and just add on SOAR, because of Pablo's point on greenhouse grown, where the SOAR premium line is.
Yeah, so that is now currently the number 4 premium flower SKU nationally. In one of our strains there, Pineapple God, has been just an extraordinary success.
Right. And then just staying with flower, when you think about the mix has changed a bit in favor of the Fraser Valley brand versus Pure Sunfarms. Is that a concern, or that's just a market, or just Fraser Valley it's been that successful? Any thoughts on that?
I like to think about, if we're driving growth for our customers, and that's really important, the boards and our retailers, then we should be helping to drive the category growth. So we probably are contributing to the growth of value because of our Fraser Valley brand. And we also have a great brand in Promenade and Pure Lane. So I think we're driving that, but that's where we want to be. 34% of all dried flower sold in Canada this year to date has been priced below $4 a gram.
Right.
So if we weren't there, we wouldn't be taking this kind of share. So our job, and certainly, Mike and team really push this down on us, is our job is really to deliver the cost structure so that we can be in very, very profitable at that 34% of share.
That's right. And then, so obviously excellent on flower, and then you touched on pre-rolls. I don't know if Mike or Ann or Steve, but we had Decibel with about 50% market share on the infused category, but we've seen more competition in infused, and obviously yourselves doing great there. If you can provide more color in terms of the growth that's driving the share gains in pre-roll. Is it, tube versus cones? Is it infused versus uninfused? Any color you can share and you're comfortable sharing. But again, congrats on the progress on pre-rolls too.
Well, on pre-rolls, it's a category, as I said, that after flower, and you see flower is stabilizing now, which is good. Everybody said it was going to come off, and of course, it's still the largest category. And actually, for a while, we just considered pre-roll a category of flower, because it really is. And by the way, when we started to move forward on pre-roll, let's take each segment of pre-roll and try to have excellence first before we get too far down there. And that's one of the differences from infused. We're going to be launching, I can't really get into it, but some really cool products, kind of what you just mentioned, but it'll be a full array across, and then increasing on our infused. But we're very proud recently, we've launched High Def, which is 100% pure flower at about a roughly 40% THC range, give or take, not infused, no keef, nothing. And people are wondering how we did it. So that just drives the innovation in our innovation team at both companies. And we're very excited what's going to be coming down the pike the rest of this year.
So if I could just add, Pablo, last year this time we were number 4 and losing share. And so I think we were appropriately criticized because we had the best flower product out there, but we couldn't seem to get the pre-roll category. Right. So the way we did it, in addition to the innovation, is we also really worked hard on assortment and what our brand value was for our pre-rolls, and really stepped back and assessed assortment and pricing. And that's been the march towards what's currently the number 2 position nationally.
Right. No, thank you. Steve, maybe a question for you here in terms of talking about the state of the industry, Canadian rec, talk about competitive dynamics. We're hearing of some consolidation, price stabilization. On the one hand, we're also hearing the sales are slowing down in terms of growth. Any color you want to provide about the state of the industry, Steve? Thanks.
I'll let Mike address that one.
Okay.
Yeah, the market's still growing, and at some point, I think we're satisfied where we are. We've seen a lot of compression on retail price with stabilization. We now have some price increases, some strategic price increases that have happened, so that's a good sign. B2B pricing is actually up, and that's a good sign after many, many years of just such a huge overcapacity in the market. I think it's pretty well getting to the point where it's gone. And we came back in, we had over index, so to speak, on our own inventory. And now we're running on basically a 6-month inventory. And you really can't run any lower in Canada because it takes so much time to be, besides the post-harvesting, drying, manufacturing, but also regulatory process. So we're in that sweet spot now, and we're very happy about managing that. But overall, it's firmed up. So we see B2B increasing, sort of the floor stabilization on retail pricing, and growth in the marketplace. And I mean, we're not going to start looking at sequential months of growth, or it's got to be really looked at year on year at this point. I think the market's matured enough to be there, and maybe growing in the single-digit factors on a base of 5 billion or so. So I still think the market can get to 8 to 9 billion over the next 5 years going forward. And any changes in the regulatory process will certainly help that.
Right. Got it. So I'll move on to that point. Steve, maybe in terms of regulatory changes you're expecting, we all hope for excise tax changes back in April, didn't happen. What's the outlook there? And then, related to that, if you can talk about changes the boards might have implemented recently or might consider implementing that you can share with us. Go ahead, Steve.
There's been some recently announced changes which were more operational in nature, but they are beneficial from a cost perspective, but they're also probably more beneficial from an operational and sales perspective. I'm encouraged. The Canadian process change is generally public. We've saw initial comments in September with respect to excise tax. We saw a recommendation. It was listed as reducing it back to the original 10% of sales. It was a list of, I think, 300 items that were in the budget in March, and we're encouraged that the federal finance department is still discussing that actively with the industry. So we still think ultimately that needs to change when 40% of your gross revenues, it's our biggest expense, is excise tax. We're current, many people aren't. So to level the playing field, people need to pay their excise tax, and if they can't, then they shouldn't be in the business. So if that consolidation will happen either because of excise tax, and ultimately, I think for the good of the industry, it needs to be corrected. Alcohol certainly doesn't pay that type of excise tax.
Any changes in terms of your boards, in terms of rules at the provincial level, whether on delivery, whether on having to go through a board or can supply retailers directly that you're expecting in terms of the major provinces, or no major changes expected?
I can jump in on this one. I don't think we want to front run conversations that we're having with the boards because they're our customers. But there are two changes you may not like, Pablo. I think BC has already announced that they're going to give us store level data. So that it might make Hi-Fi even tougher to compare to. Mm-hmm. And there's some conversations. I think Ontario plans to do the same. So that would really help people like us with out of stocks. I mean, that's an upside. Right. As a opportunity still ahead, but the rest of the conversations, I think we should just keep among customers.
Sure. No, thank you. So look, I want to touch on the US now, and then we'll touch on international. Obviously, you have a lot going on in international, but Mike, in terms of the US, right? Obviously, when people think of a Canadian licensed producers, which of course are global companies, right? Are NASDAQ listed. We hear of Canopy, right? And that potential US footprint. We hear of SNDL. Organigram recently has made some comments about potential investments in MSOs via Jupiter. How does Village Farms think about the US opportunity and potential investments you could make there? And let's leave Texas aside for 1 second. We'll come to it. It's very relevant part of the story, of course. But how do you think about the US opportunity from a cannabis perspective? Not CBD, but cannabis.
Measured, and as I said earlier, we look at it as everything happening in the U.S., and it is the largest market. It will be the largest market. So patience is not just a virtue; it's prudent right now. We're watching everything and everybody, whether it's Canadian LPs having structures and how they manage those structures, getting into the market, and who's trying to buy assets that may be distressed, and and what is happening with descheduling and the political situation. And I would say, on one hand, we've made certain minor moves, probably prematurely. And as I said earlier, we're very disciplined. We're not doing, certainly not expending capital till we understand clearly what the playing field is, what the rules are. And in the US, it's not there. If there's one mistake we made was hoping that something was going to happen last year or the year before yesterday. It's all over the place. So we're very excited about the US market. We're going to go all out. We're a US founders, US company. But until all those rules come through, we're just going to kind of sit and wait and see what happens. Now, these structures that are going on, whether the NASDAQ accepts or not, it's still not 100% clear to us. It's not. So we want to wait and see. And that's a structure we can take on. We think there's a lot of potential, even especially in the M&A sector, when you take Texas out of the equation. Right. So without talking about Texas, we'll continue to watch what happens in an election year. Anything can happen. But I can tell you, our number one target, when it's right for us, will be the U.S. market.
Okay, so let's stay on that. And Texas specifically, for those that are not too familiar with the story maybe in detail, remind us of your assets in Texas, the scale of your greenhouses there. Are they all operational? If you ever need to have the opportunity to flip them to cannabis, how much will it cost? Just some color there that you can share.
Sure. So Texas, 6 million, almost 6 million square feet under glass, super high-tech controlled environmental growing facilities. We think it's the best place in the continental United States, bar none, to grow, to be able to be a leader in the Texas market. And when interstate commerce happens, we think that advantage, just like in Canada, and I'm not just saying these words because that's exactly the business model and the approach we took in Canada, and the numbers speak for themselves there, and we'll do the same in the US. Now, there may be some areas on the West Coast, California, where one could say it's a great growing climate, but when we look at operating in Canada with all the issues and restrictions, we just rather not go there. So even if you took Canada out of it, that's the place to be. Now, there's clearly Texas is a conservative state. It is slowly changing, and we have to be patient. But that footprint, that to us, it's a diamond in the rough. That 5.5 million square feet, even with half of it going into cannabis, we think will be a game changer for the U.S. market, because in the end, we don't believe that growing in small footprints in the northern states, indoors, high use of energy, at the end of the day, consumers going to go to get the best value proposition, and price is going to play an important part. So it may take a while, and produce at times is rough. It's a rough business because of NAFTA. We're competing with Mexico and the U.S. And keep in mind, one day that may happen in cannabis, right? Because it is a crop that would certainly qualify for USMCA in the future. But that's what's happened in the produce business. So there are rough times, but ultimately that the replacement value of those assets is north of $350 million. And what we've proven in Canada is it's not just the assets that you would have to build in the right location. It's the knowledge. We've been operating there for 20 plus years. So the know-how of our growers, which again was proved with those same folks in Canada, would be such a competitive position for us going forward. So it's not, we don't know when that's going to happen, but that's a great optionality for Village Farms.
Yeah, but just to stay there, so you talked about, I think, 6 million square feet, right? Your calculation, $350 million. How much is it, like 2, 3 greenhouses? Are they all operational right now? Could you monetize some of that in the short term? How do you think about that? I don't know if you want to answer that.
There are, without going too deep in it, we're looking at ways that we can, we can find ways to, let me just say, perform better on the produce side. That's what we're working on today. But the retention of those assets is very important. So we're finding a way where we can continue to keep our assets and operate maybe in a different methodology to help our produce business during that time. And I'll leave it at that.
Understood. Look, I'm going to stay on Texas. I'm sorry, forgetting about, federal legalization, but Texas could have a medical program at some point, right? They do have one right now, but it's very restricted. Supposedly companies are applying for the new program, right? But that's been delayed. So hypothetically speaking, would you be applying for a Texas medical license? And if you were to get one, how would you manage it, right? Meaning that given your NASDAQ listing.
Well, we already applied for the license, so
Okay.
we're very excited about that. And there is traction in Texas. And I think this next legislative session that starts in January, I think will be the most productive one in the last two sessions. So Texas legislature meets every 2 years. It'll start in January. And even at this point, there's indication that the medical program will get some traction. That's what we feel. That's what we're hearing. We're very involved with our consultants and our folks there. We did apply for a license. I think there were about 110 applicants. I think we stand a very great chance of getting one of those. We do have a hemp license in Texas. And look, we're very connected in Texas. We've been operating there, as I said, almost probably going on close to 25 years. Texas is the second most populated state. So even when it comes to a medical license, even if it has some restrictions on the therapies, it's a hugely growing state. It's almost the population of Canada for that matter. So it's a good place to be.
But just to stay there, and I know it's hypothetical, right? But if we don't have federal legalization, but Texas becomes, a very attractive medical market like in Florida, of course you want to be there if you get a license. How will you manage an NASDAQ listing if that were to happen?
Well, we're not sure that, let's just say we'll either find a way or make a way. How's that?
Right.
Well,
okay. No.
Just if I'll just jump in. So obviously several companies are on NASDAQ. Our NASDAQ listing is very important to us. We will maintain that. And if we are successful, with a license, we have a structure, a ring fence, for lack of a better word, structure that we believe would be acceptable to NASDAQ.
That's good, understood. So that could be great news. I know it's taking a while there, but let's see what happens next year with that session. So let's move on to international. Maybe Steve, I'll start with you. If you can just frame for us your international business, right? Part of it is your domestic B2B because that I hear that gets re-exported, and then there's your own exports that you report on a quarterly basis. Just remind us of what countries you're in right now of your international business.
Currently, we're in Germany, Australia, Israel, and the UK. All, as Ann had mentioned, on the medicinal side, all asset light, exporting from Canada. You're correct. Most of our B2B business, wholesale business, as we reported, we know that's international. We're very strategic with our B2B business. We're just not, the finance team isn't running that just for profit. We're very strategic who we sell and where that product is going. And we're keenly aware that much of it is going to some of the same markets that we're currently also selling into. Others have invested in infrastructure or sales teams, or have different relationships in those countries. All of those countries are still relatively new. I know there's great expectations for places like Germany, but most of the importers on the receiving side are pretty small companies, and it takes a while it's going to take all of us a while to build these businesses up to be significant in any one country.
Right. I don't know how much you can go on. Sorry, go on.
Just add to what Steve is saying. We're very excited about, our decision as we were waiting for the U.S. market, and you alluded to this earlier, was not knowing what the timing was, and my comment that we felt we now created a really good position for us in Canada to grow on. That's when we decided to really enter the international market with, as Steve mentioned, a light asset model, which is awesome on the medicinal side for us. And we have the horsepower. If we now have 2.2 million square feet dedicated, keep in mind on the same footprint in British Columbia, we have additional facility that's another 2.8 million square feet. Those facilities, as I mentioned in the past, could do 35% of the Canadian market from the one footprint. So certainly we have the capacity to increase our production even more in years ahead on that medicinal market. And we really believe that light asset model, Canada will be a leader in providing cannabis to multiple international medical markets. I think it's going to be very difficult for producers in those countries to compete with Canada or compete with, like what I mentioned earlier about Village Farms' cost advantage. Recreation is a whole different business. And just to touch on that real quick, recreational is where you have to produce in country. And one of the other countries that we're in for recreational purposes is the Netherlands. They issued 10 licenses, the Netherlands government, to legalize cannabis in the Netherlands. And for those who don't know, it's never been legal in the cannabis, either on the cultivation side, not even the coffee shops. They've been tolerated. So now the Dutch government is moving in that direction. They issued 10 licenses. It's like a limited license country. And Village Farms is the only North American company to have a license. We're actually almost done with our first facility. It should be complete in October. We'll be planting out our first crop. Looking at revenues first quarter, we may actually have our first harvest before year end this year. Very excited about that. And that could be a great stepping stone for us in other countries as they look to legalization. So it's really a parallel approach. Light asset model out of Canada, be it Australia or the EU.
Right.
And with our expertise, I think it's unsurpassed, our cultivation expertise. And we'll probably look at building a second project in the Netherlands next year going forward to meet the demand there.
All right.
We're very excited about that. I will say that the Netherlands compared to Canada is zero tax, much higher price. So from a margin perspective, we see that being very accretive for us in the years ahead.
Okay, no, that's great. I want to delve into those countries in more detail if we can, and I want to touch on the Netherlands. Just in the case of Germany, I hear the idea of being, cautious and steady, right, and going gradual, right. But in the case of Germany, we had the change in narcotic law April 1st. We're seeing significant growth, according to some operators, talking about sales doubling over a 4-month period. Some say, some people saying the market would be up 10 times over the next 2 years. I'm not saying you're late to the party, but do you need to be a bit more aggressive in terms of what you're thinking about Germany?
We are aggressive and we're not late to the party. So we already have gone through our second audit on EU GMP. There's very few companies in Canada that have EU GMP, and I don't really know of any who have our scale capability, the capacity we can generate. So we have great potential. We just had our second audit after 3 years. So we are EU GMP certified. We've invested heavily in a leadership team. We have now a president of our international we brought over. It was an individual who was interim president of the SQDC. So we started adding quite a few people to that team, and we're very aggressive. And I think you'll start seeing those numbers increase. So I think what Steve was alluding to is Germany is rolling. Other countries are. We're just not touting it. We just don't want to tout it like, oh my God, it's going to be the greatest thing since sliced bread tomorrow. It will start growing. There is movement. We're very excited about it. And it's a very large market. The EU is a very large market. There'll be a number of players. But I think, Pablo, it comes down to, for that medicinal market, do you have the right price and the right quality, what the products the consumer wants, those brands, and then working with the right partners. And we're investing heavily in that.
Right. Yeah. And I'm sure, in the case of Germany, some people are beginning, it's maybe a minority still, but some people are beginning to get excited about the potential for a rec pilot program, right, to start as early as next year. I mean, I know that's a bit of a contrarian view, but some people are starting to make that argument, and that even imports would be allowed, right? So that would put you in a great position, given your cost advantage and your experience in records.
Yeah, because I think it's going to be very difficult to cultivate in many of these countries in the EU with the cost structure they have.
Right. No, I agree. Look, I mean, so thank you for that.
Just one quick thing. I think you've done great work on Germany, because a lot of the viewpoints are showing up, in your work. But I think it's, as Mike said, it's really still a moving target. There's so many left turns. Look at the US, right? How many turns have we made there thinking we were finally on the way? So this is the way to optimize our return on capital and use our great assets in Canada.
Thank you. Look, I want to touch on the Netherlands because I think it's obvious, it's very important. And like Mike said, you're the only kind of international operator of those 10. but just give us more color, right? Like, are you supplying, how many, is it a province by province pilot program? Do you supply all the coffee shops? Is the test only of 10% of the coffee shops out there? What happens if those coffee shops continue to buy from the gray market? I want to have more detail to see the upside here. I can see a lot of, like you say, winding road in the case of Holland, but more color if you can share.
Sure, and it's as Ann said, it's like every other market we've seen. I mean, they're all figuring it out, but the Dutch government is very committed to it. There are 10 license holders. There's 500, approximately, these are approximate numbers, say 560 coffee shops in the Netherlands. 99 are part of the project now. The way it was set up is those 99 coffee shops must buy from the 10 license holders. However, it's been a while to get all 10 in production. Like, there's a minimum amount of production each coffee shop must do.
Right.
That is required, that capacity is required to meet the needs of those 99 coffee shops. So they've taken a little bit of a left turn, allowing some of those coffee shops initially to still get product from the sources they were getting them before, till all 10 license holder that capacity is there. And that's just a startup situation, but it's going to be set up where those 99 that are in the experiment must buy from the 10 license holders, and the 10 license holders can sell any one of those 99. So the locations of the assets to grow in are by location. We have 2 locations. The minimum quantities will be of 6,500 square feet to start, and then once everybody's up to speed, and I think probably of the 10, you'll probably see 8 by year end starting. So it's gaining traction. They have set it up in a very fair way, no taxes. And when you look at the Canadian landscape, you know what the tax situation is there.
Right.
Prices are much higher, and the Dutch government wants to control those prices to remain high. That's a big must for them, because they don't want to, just turn it on to make it a commodity or available to younger people, so on. So I think it's a very measured, disciplined approach they're using.
Right.
And we're excited about our participation there.
Right, and you said that of 8 of the 10 probably will be ready to start by late this year, early next year. So like you said, you should be able to accrue revenue from there. You will be in a position to start supplying the market, right? They won't wait for all 10 to be up and running.
We have revenues for first quarter for sure.
Yeah. And just the last question on Holland. What happens to the other?
Just to add, we've invested so far over 15 million euros just out of cash. We paid for everything out of cash. So we didn't borrow any money to do that. And that first facility will be fully in production, as I said, by October.
That's great. And what's the government saying about the other 466 coffee shops, right? You said there's 565, 99 are part of the program. Are the others going to continue to sell and buy from the illegal market?
Yeah, I mean, because it's a process to get there. So they will. And it's a little convoluted, but as Ann said, you say the same thing about the U.S. Every state has different laws.
Can't expect to, right. Yeah.
So
I also think, to Mike's point earlier, it's been a permitted activity, but not a legal activity. So I think there is some benefit that the coffee shops perceive if they can participate. So I think it's gonna gather their speed as the capacity is there. I think they're doing a very good job of not creating an undersupply or an oversupply condition. They learned from Canada.
Yeah, no, I agree. I think that Holland should get more attention. I think that it's a great opportunity, and obviously you guys are in a great position there. So it's good.
Yeah, more coffee shops, just to interject, more coffee shops wanted to participate, but you ask, is it a territory provincial? It was a municipal thing. So 10 cities gave a thumbs up for the trial, so their coffee shops can participate.
That's a great point. And the other thing that to keep it, in the headlines is the Dutch government's been very good about putting out milestones. They're very publicly tracking things. So last month, for example, they acknowledged that they were now at the full 10 that Steve just mentioned. It had started with 2, so it's been a very measured program.
Right. Look, I don't want to go into too much. I know but in the case of Holland, so in the example you gave, so let's say I'm hypothetically, if Rotterdam is allowing coffee shops, that means that all the coffee shops there will be able to sell, or only some of them?
Some of them.
Oh, some of them. Okay.
Rotterdam's not
Rotterdam.
in, but yes.
Okay, yeah, I hear you. Okay, the last two things.
And
on
by the way,
exports.
one thing, they were one goal away from being in the finals, so
Yeah, no, we hear that. Yeah, and then in terms of Israel, have you shipped to Israel since the war started?
we have not, but we've been there, but we have not.
Yeah,
Yep.
but you have not.
But
Okay.
we
And
have
look, I
not.
mean, people don't talk enough about Australia. Australia is a bigger market than Germany right now. Just briefly remind us, I mean, you own a company there with a minority stake. Remind
Yeah.
us your operation there. You know, we saw Aurora, they owned, I think, X% to a company and bought the rest. Is that an opportunity for you guys in Australia?
Yeah, I think we've taken an approach on the medicinal side of not being exclusive with anybody, whether we have an investment in them or not. I think that's prudent right now because it's still a very, there's still a lot of moving parts, so to speak. So Australia is a very good market for us. We've been there now for probably 3 or 4 years. Yes, you're right. It is a large market. It may even go rec sometime in the future. New Zealand may come on medicinal. So we have a position there. And again, we have that position because the rules are clear for medicinal. So I can't really elaborate what may do in Australia that we're not doing today, but it's a very important market for us but the EU is equally important.
Sure.
And, but Israel, as you know, there was an investigation for dumping. I'm not sure. We're waiting to see what the prognosis is going to be there. I know they came out with their findings, as you well know, this week. But really, for us, it's about the EU, and we're very proud in England. We have multiple repeat orders in England, the UK rather, from with our brands in place, and they're doing very well. Right. So, and then in Australia, where the company that we have a minority stake has our biomass creating their own brands. Now, that's not to say we won't look at our brands in the future there as well. So our management team that's focused on international, just like our team at Pure Sunfarms and Rose, done a magnificent job. We've really ramped it up over the last year and a half, and we're starting to get traction. So very exciting to see what we can put up in numbers in 25 and 26.
Understood. That's great. Steve, I'll move the conversation out to just a few financial questions. Steve, how do you feel about your balance sheet right now and your cash burn trends? Or cash flow trends, I should say, but go on, yeah.
We feel very good about, our balance sheet. It certainly supports our current operations. Our debt is all current. The next maturity is our cannabis debt, which doesn't mature until 2026. So we don't have any renewals coming up. There's no pressure there. We're current on excise tax, which I don't think, if everyone was truthful and showed it on their balance sheet, I don't think a lot of public companies are as current as maybe they allude to be. But so our current cash flow is particularly from cannabis is supporting the large organization.
And if you can just briefly remind us, have you given any type of guidance either for the June quarter or for the full year?
We haven't given guidance, and we historically haven't given guidance, so we just don't go there.
Okay. And Mike, just one quick question, quick answer. Would it make sense to divest all of produce at some point or sell some or all of the Texas greenhouses? And it's just a question. Don't shoot the messenger here, as I say.
Let me just say that the way we look at our produce business going forward is not a separation, but trying to bring clarity to the fulfillment, production, marketing, sales side. I think today companies have to get bigger to compete better and control the environment. And that industry wasn't even around. If you look at, say, tomatoes 30 years ago, 1 or 2% of the fresh tomato market, multi-billion-dollar fresh tomato market, was grown in controlled environmental greenhouses. The rest were in field. Today, it's the opposite. And the same will happen to cucumbers, in my opinion, and peppers. So the market's going to continue to grow. We're pretty proud. We were the first, and we're the oldest and first and oldest. And not that first is always better, but I just said that earlier. But we're the oldest operating hydroponic greenhouse in the United States. We're number 4 in the category. So we have a lot of value there. But on the other hand, the assets are very important to us. So we're always looking at ways that we can accomplish growth to have greater scale and significance, but maintain the optionality with the assets. And I'll leave.
Okay. Look, before we move to closing remarks, I'll take some questions on the Twitter feed also and Zoom, but just one from me here. You know, I always wondered about the liquidity of some of the Canadian licensed producers. You know, here you are, top 2 player in Canada, right? You have all this US optionality you've talked about. You have a true cost leadership advantage. You have the international angle, right? And yet there's other LPs that are a lot more liquid in NASDAQ, right? I don't know if that's, there are historical reasons for that. I don't know how you think about that in terms of liquidity, and I don't know how much you can do about it anyway. But any big picture thoughts anyone
I'm going to let
can
Ann
share on
answer
that?
that. I'll let Ann.
You know what, Pablo, I would love to hear the answer from investors on that one, because that's not something we control. So as you know, our job is to drive shareholder value, stakeholder value with our operations, and the liquidity of the stock is got a lot of technical factors in it. So I'd love to hear others that answer other thoughts, and we're open to ideas. And there's a email on our website, and anybody who wants to throw out some ideas about improving liquidity, I'm all ears.
Right, understood. And okay, and but is it like historic? I mean, the company used to be initially, you know, was part of had a different structure. There was a spin-off, right? I don't know if that's part of the story or not really. Yeah, go on.
As you know, you and I have talked about this, Pablo, and I think you've given me some good heads up. We were not traditionally, we didn't start as a cannabis company.
Right.
We actually had a very measured investment with a partner. We are now the surviving entity of that, and have, you know, tripled whatever the revenues are since then. And so perhaps we weren't at the initial stage when it was much more of a popular industry to invest in, and liquidity built that way. But regardless, I think you've nailed the true benefit of an investment in Village Farms is our profitability. We've converted our profitability with great market share, and we're expanding globally.
Right. Thank you. Look, in terms of just Q&A that's coming through, someone asking about any new developments or comments you can make about the Vancouver landfill project that I think you disclosed recently.
Yeah, we're actually excited. We'll be doing an open house there in the fall. So that took almost 7 years to pull off because of the regulations. Talk about a highly regulated industry and a highly regulated location. But we went live in the first quarter, so it's completed. Our partner invested about $55 million, taking landfill gas, it's renewable energy, and those royalties have commenced to us. So we've gotten that in the end zone, and now with zero capital outlay, we'll be receiving royalties every single month going forward for the foreseeable future. And we're still working on some other ideas to improve some of our energy technology in British Columbia as well.
Can you quantify the royalty?
It's roughly right now, and I don't know, it's fully up to scale. It's roughly $200,000 a month.
Okay, Steve, someone asking me about if you can, you know, if you can give a sense of what would be normalized EBITDA for the produce business. I know it's a very cyclical and volatile business, but roughly what would be if you can, rough metric of a normalized EBITDA number?
I've been here 15 years. I don't know what normal is yet. It's as Mike said, it's a highly competitive market. The retailers are you know, very demanding, and it's a very, you know, very challenging business. Right. Quarter to quarter, month to month, right. Season to season.
Yeah, and trying to add color to Steve again. It's the market is the U.S., but the largest producers for the products, those high value products, those commodities, are from Mexico and Canada. So if you're in Canada, growing in Canadian dollars, exporting to the U.S., you have a currency advantage right there of 25%. Now we grow in Canada as well, produce, right?
Right.
That's a big difference. If you have a great foreign worker program like Canada, and Mexico has a great labor pool, and the US has a terrible foreign worker program. So all these factors come in, and that's really what happens when you go from, supposedly free trade, fair trade in those situations. So that's the industry we're in, but we're managing through it. And
right. So someone asking about your in terms of produce production, is it half Canadian and half Texas for you, roughly? I don't know if you can.
It would be based on season. So our Canadian assets produce from revenue from pretty much April to early December. Our Texas assets are going dark now, so they produce revenue from, let's say, September to June.
Right,
So,
but annualized, they are both about the same size in terms of output?
No. We have more acres, i.e. more output in Texas than we do from Canada, because we've converted a lot of Canada to cannabis.
Yes, that's right. And then someone asking me, 2-3 years ago, you had a bit of a perfect storm in the produce business. What's the state of the business there? Whatever you can share, Steve.
State of the business with respect to the brown rugose virus, which is a global tomato virus. The seed, we've learned our process and procedures are to handle it better. It's not been eliminated. It still exists, both for us and for everyone. We manage it better, I think, than most. That being said, it still exists. It still negatively impacts our yields. But the seed companies are on board and are developing resistant strains.
Understood. Right. I know we're past the hour mark here. I want to thank each one of you for speaking to our audience here today. Very much appreciated. Any closing remarks that any one of you want to make? Maybe Mike?
Well, again, thank you, Pablo. I just want to highlight, when we get on these calls, the three of us today, to try to explain what we're doing at Village Farms to our current investors and potential investors, sometimes we have to acknowledge that the people we have doing amazing things in our companies. And when you look at not to just only segregated to cannabis, but some of the items we touched on today with the market share and the innovation, a lot of work goes on there. So I want to just commend our folks. That's a big part of our success going forward. But I think Village Farms is greatly positioned to be a leader in the global cannabis market. I've said that in the past, but now I think after 5-6 years, we're starting to demonstrate it with our numbers, and our business model makes the case. You've seen a lot of turmoil in the Canadian market. Billions of dollars have been spent, assets shuttered. I mean, the amount of bankruptcies happening this year alone are just unbelievable. So I think long-term, we're going to go there. It's an inefficient capital market today, but I think at some point, it has to come back to fundamentals. And I think if you compare the fundamentals of what we're doing at Village Farms to others, you'll see a big difference going forward. So appreciate the time, Pablo, and again, appreciate highlighting Village Farms.
Yeah, our pleasure. Right, everyone have a good day. Thank you, Mike, Steve, and thanks.
Thank you, Pablo.
Bye.